Well, Graham, there's been a massive stouse between the government and the mining industry bodies and the mining companies over the resource rent tax, obviously, over the past couple of months. But it seems to me that the Business Council has been pretty soft on it. You took a month to say anything about it at all, and you certainly haven't been taking out advertisements on TV against it. So can you explain why the BCA has been so soft on the RSPT?
Look, I don't agree with your premise, Alan, in that question. Right from the word go, we published op-eds concerned about the radical nature of this new proposal. It's the fact that it was untested. Like everybody, it was foisted on us with the release of the Henry Review on the 2nd of May, and quite frankly, it took many people in the business community a bit of time to digest the full sophistication and issues with this tax structure. Subsequently, in the context of the budget response from the Business Council, Katie Lay took serious issue with the implications of this tax, and as the month of May rolled forward into June, it became clear that this was a concern not just to the mining CEOs in the Business Council, but in fact to all of our CEOs, and that's a message that we've been delivering to the government, I think forcefully and emphatically, over the last couple of weeks, including to the former Prime Minister last week at our Business Council dinner with he and the Ministry in Canberra. And of course earlier last week I published quite a critical op-ed piece on the process of tax reform that's been, we think, not the right one to progress a really major tax reform of this kind.
Well, so okay, let's be clear about what you think then. Are you saying that the RSPT should be abandoned and they should start again? Is that what are you complaining about the process, or are you complaining about the tax itself?
Well, both. Firstly, the process has not been an ideal one, with this particular tax plucked out of the context of the wider reforms recommended by the Henry Review. We've been critical of the process of release of the Henry Review, the delay in doing that, and now the absence of, by both sides of politics, of an embrace of some of the very worthwhile reform suggestions there, which should be the subject of wide public debate and consideration, as this tax should have been. So the process has been far from ideal, but also the tax itself seems to us to have structural flaws, and again, a couple of weeks before the release of the Henry Report, the Business Council published our principles for good tax reform policy, and this tax proposal fails to meet many of those principles. For example, one of the important principles is that there should be stability and predictability in our tax arrangements, and that changes, fundamental changes, should not be retrospective but should be prospective. And on those two counts alone, this tax raised very serious concerns across the business community. And the third point would be that any tax reform shouldn't raise the spectre of sovereign risk. And clearly the way this debate has been progressed, the process and the tax itself has raised serious concerns in the international business community, which will rebound right across all Australian areas of business and investment about the sovereign risk status of Australia. And it's disappointing to business that our formerly gold standard reputation as a low sovereign risk country in which to do business and invest has been put under a cloud by this tax.